What if you already had $1 million ready to invest? No debt, no confusion, no beginner questions. You already understand index funds. The only thing you want to know is this: how fast can $1 million realistically turn into $2 million? Just by compounding. Not in theory, not in fantasy, but based on how real Vanguard index funds have actually performed. That's exactly what we're breaking down today. Welcome back to Extra Money, the channel where we don't chase hype. We break down how money actually grows. In this video, we're counting down 5 Vanguard index funds, starting with the most balanced and ending with the fastest. For each fund, we'll cover what it holds, how it grows, how dividends play a role, and most importantly, how many years it could realistically take to double a $1 million investment. Dividends are reinvested. No extra money is added, taxes are ignored, assuming a tax-advantaged account. Same rules for every fund. Let's get started. Number 5, Vanguard Target Retirement 2060, VTTSX. This fund is built for one thing above everything else: simplicity. It's designed for people who don't want to think about asset allocation, rebalancing, or risk adjustments. You invest once, and the fund handles everything. But that convenience comes with a trade-off. This fund is not built for speed, it's built for stability. Inside, the money is spread across US stocks, international stocks, bonds. Stocks do most of the work early on, but bonds are always present. And over time, the fund automatically shifts more money into bonds to reduce volatility. That smoother ride also puts a cap on growth. Dividend yield, about 1.8%. Dividend growth, around 7%. Average price growth, roughly 8% per year. So what does that mean in real terms? A $1 million investment would take about 8 years to cross the $2 million mark. Slow, steady, low stress, but also the longest wait on this list. So the question becomes, what happens if you remove bonds entirely and let stocks do all the work? Number 4, Vanguard Total US Stock Market, IPX. Now the strategy clearly shifts. This fund goes all in on stocks. It owns the entire US-like stock market, large companies, mid-sized businesses, and small firms, all in one fund. No predictions, no opinions. The market itself constantly reshapes the portfolio. Here's what changes. Dividend yield, about 2.3%. Dividend growth, roughly 11%. Average price growth, around 9%. With full stock exposure and faster growing dividends, compounding starts working harder. A $1 million investment would reach $2 million in about 7 years. 1 year faster, just by removing bonds. But now another question naturally comes up. If owning everything works better, what happens if you focus only on the biggest winners? Number 3, Vanguard S&P 500 Index, VFIX. This is where things start to speed up noticeably. Instead of owning thousands of stocks, this fund focuses on the 500 largest US companies. These are the businesses that already dominate the economy. The structure favors success. Winners gain more weight, losers fade out, momentum compounds over time. The income side is smaller. Dividend yield about 1.1%, dividend growth roughly 5.5%. But price growth does the heavy lifting. Average annual growth about 12%. That difference matters. With this fund, a $1 million investment could double in around 6 years. Faster growth, more volatility, less waiting, and now the obvious thought, what if growth is the only priority? And our number 2, Vanguard Mega Cap Growth. At this point, comfort is no longer the goal. This fund focuses on mega cap growth companies, the largest, fastest scaling businesses in the market. Think technology-driven companies with massive platforms and global reach. Income is almost irrelevant here. Dividend yield, about 0.4%. Dividend growth, slightly negative. That's not a weakness, it's a choice. These companies reinvest almost everything back into growth, and it shows. Average price growth around 16% per year. With that kind of compounding, $1 million could reach $2 million in about 5 years. That's a massive difference compared to balanced funds. But there's one final step. What happens if you focus entirely on the fastest growing sector in the economy? Yeah, sure. Number 1, Vanguard Information Technology Index, VITAX. This is the fastest option on the list. No diversification for comfort, no concern for volatility, just speed. This fund concentrates entirely on technology, software, semiconductors, cloud infrastructure, and digital platforms. Income is almost non-existent. Dividend yield, about 0.4%. Dividend growth, negative. But growth is unmatched. Average price growth, over 21% per year. With compounding at that pace, $1 million could realistically cross $2 million in about 4 years. That's half the time of the most conservative fund on this list. Final comparison. From slowest to fastest, Target Retirement Fund 8 years, Total Market Fund 7 years, S&P 500 Fund 6 years, Mega Cap Growth Fund 5 years, Technology Index Fund 4 years, same starting amount, same rules, completely different timelines. Now, most people don't start with $1 million. But here's the good news. You don't need to. There's actually a much easier way to build toward a realistic income goal with small, consistent contributions. Click the video on your screen to learn how someone can work towards $7,000 a month starting with just $20 a week. This is Extra Money, and I'll see you in the next video.